Every trader enters the market believing they are battling charts, news, and volatility. But the deeper truth is this: the market is not your enemy. It is your mirror. It doesn't punish you for randomness. It exposes you for who you already are. If you are patient, it reflects patience. If you are impulsive, it reflects impulsivity. Every trade you take is not just a decision. It is a reflection of your personality. Ask any losing trader, and you will hear the same reasons. The market was manipulated. The news ruined my setup. The broker hunted my stop loss. Rarely do they say, I lost because my personality pushed me to act against my plan. This denial is natural because it is easier to blame something external. But until a trader accepts responsibility, they remain trapped in the same cycle. The truth is, the same market condition produces winners and losers simultaneously. If the market was truly the cause, everyone would lose together or win together. But that doesn't happen. Why? Because the difference is psychology, not candles. Let's break it down. Impulsive personality. Sees a fast-moving chart, jumps in without confirmation. Wins feel euphoric, but losses are catastrophic. Market reflects their need for thrill. Cautious personality. Waits endlessly for the perfect setup. Often misses a move, entering late. Market reflects their fear of risk. Confident personality. Believes strongly in their strategy. Stays calm during drawdowns. Market reflects their inner stability. Fearful personality. Takes small positions but exits too early. Market reflects their lack of trust in themselves. The pattern is clear. The market doesn't decide. Your personality decides. Think of personality as your invisible trading system, one that operates before indicators, before strategies, before decisions. A trader high in openness will naturally look for innovation, exotic instruments, new markets, experimental methods. A trader high in conscientiousness will automatically lean towards structure, fixed rules, journaling, discipline, risk. A trader high in neuroticism will subconsciously feel drawn to short-term trades, hoping for control, but suffering from overreaction. The irony is, traders often copy systems from others without realizing their own psychology is misaligned with it. A scalper's fast-paced system in the hand of a cautious, anxious person is a recipe for disaster. A swing trading system in the hands of a thrill-seeker feels like torture. The Holy Grail is not a system. It is alignment between personality and method. Imagine two traders watching euro to US dollar during a volatile news event. Trader A, high conscientiousness, waits for confirmation, checks risk, sizes position small. Even if wrong, they lose controlled amounts. Trader B, high neuroticism, jumps in early out of fear of missing out, exits too soon when the candle moves against them, ends up overtrading, chasing losses. Same chart, same candles. Trader A survives. Trader B self-destructs. The difference? Personality. Think of the market as an ocean. Every trader is a ship. Some are built for speed, some for endurance, some for storms. The ocean doesn't change itself for you. It simply tests the vessel you bring. An impulsive trader is like a speedboat, thrilling but crashes often. A conscientious trader is like a cargo ship, steady, structured, but sometimes too slow. An emotional trader is like a fragile boat, tossed around by every wave. A balanced trader is like a well-designed vessel, able to adapt to storms, yet steady in calm waters. The ocean doesn't decide who survives. The design of the ship does. Market conditions are temporary. Bull runs, crashes, volatility spikes. They come and go. But your personality is permanent. That's why some traders make consistent profits in bear markets, while others lose everything in bull markets. The external environment changes, but the internal driver, personality, remains constant. Research in behavioral finance confirms this. Traders with high emotional stability consistently outperform those with high anxiety, regardless of market trends. Those with disciplined, conscientious traits have steadier equity curves compared to impulsive ones. It's not about predicting candles. It's about managing yourself. Assess yourself honestly. Take a Big 5 personality test. Journal your emotions during trades. Fear, hesitation, excitement. Identify patterns. Choose a style that fits. If you are impulsive, avoid scalping, use longer time frames. If you are cautious, automate entries, reduce hesitation. If you are thrill-seeking, allocate a small play account while keeping the main strategy steady. Create guardrails, rules for maximum trades per day. Predefine stop loss and take profit. Accountability partner or trading journal review. Work with your trait, not against it. Don't try to erase who you are. Adapt strategies that channel your strengths while protecting against weaknesses. Carl Jung once said, "Until you make the unconscious conscious, it will direct your life, and you will call it fate." In trading, until you understand your personality, it will direct your trades, and you will call it bad luck. But luck has nothing to do with it. It's psychology all along. Stoic philosophers also taught that the greatest victory is not over the world, but over the self. In markets, the same truth applies. The charts are not your enemy. The ego, fear, and hidden impulses within you are. The market is a mirror, not a mystery. If you are chaotic inside, your equity curve will be chaotic. If you are disciplined inside, your account will reflect that discipline. No news, no broker, no indicator can change this truth. Your personality shapes your trading more than any condition outside you. Master the self, and the market will follow.
The trader who knows his charts but does not know himself will always remain blind. The trader who knows himself but ignores the charts may also stumble. But the one who knows both, the outer and the inner, moves with clarity. The secret is not just about learning the markets. It is about learning the self. Every human being has personality traits that drive behavior. These traits are not good or bad by themselves, they are neutral forces. What makes them strengths or weaknesses is awareness. Without awareness, your strongest trait can destroy you. With awareness, even your weakest trait can be turned into a weapon. When you enter a trade, you think you are using logic. But underneath, traits silently guide you. Your risk tolerance comes from your temperament. Your patience or impatience comes from your natural tendencies. Your reaction to loss comes from emotional wiring. If you don't see these traits clearly, they operate in the shadows. Carl Jung's concept of the shadow applies here. Whatever you ignore in yourself will control you without your consent. Awareness is like shining a light into that shadow. Let's examine common traits in traders. 1. Discipline. Strength keeps you consistent, prevents emotional decisions. Weakness, without awareness, can turn into rigidity. You might ignore new market conditions because you are too disciplined to adapt. 2. Patience. Strength allows you to wait for the right setup. Weakness can turn into paralysis. You keep waiting for perfect conditions and miss opportunities. 3. Confidence. Strength helps you hold through drawdowns, trust your plan. Weakness can slide into overconfidence. You take oversized trades, believing you cannot be wrong. 4. Caution. Strength protects capital, prevents reckless trades. Weakness leads to fear of risk. You never size properly, never grow, and remain stagnant. 5. Ambition. Strength fuels growth, pushes you to learn. Weakness turns into greed. You chase every trade, trying to get rich overnight. Notice, the same trait can both build or break you. Awareness is the dividing line. The greatest danger is not a losing trade. The greatest danger is lying to yourself about who you are. The impulsive trader says, "I'm just aggressive. That's my edge." But in reality, they are gambling. The fearful trader says, "I'm just cautious." But in reality, they are avoiding growth. The overconfident trader says, "I'm disciplined." But in reality, they are taking reckless risks disguised as conviction. Self-deception is the enemy. Awareness cuts through the lies. Journaling. After each trade, write not just the entry/exit but your emotions, fear, excitement, hesitation. Over time, patterns emerge. You will see your traits on paper. Personality assessments. Big 5 Personality Test. Myers-Briggs. These are not perfect, but they reveal tendencies you might ignore. Mirror feedback. Ask a friend or mentor, what do you think my biggest weakness is as a trader? Sometimes others see what you deny. Meditative reflection. Before trading, sit in silence. Ask yourself, am I entering this trade out of strategy or emotion? This practice alone reveals hidden motives. Trader A, unaware. Trait, confidence. Without awareness, this turns into arrogance. He keeps doubling down on losing trades until the account blows up. Trader B, aware. Trait, confidence. With awareness, he recognizes the danger of overconfidence. He builds rules, no more than 2% risk per trade. Now, confidence becomes resilience. The same personality, two different outcomes. The difference was awareness. One of the most powerful outcomes of awareness is transformation. If you are impulsive, use it in a positive way by trading news events, but with strict risk controls. If you are cautious, use it to become a strong risk manager, while automating entries so fear doesn't freeze you. If you are impatient, channel it into shorter time frames, but with clear stop rules. If you are perfectionist, use it to refine journaling and system testing, instead of waiting endlessly for perfect setups. Awareness does not erase traits. It gives you control over them. Socrates said, know thyself. In trading, this becomes, trade thyself. Markets are neutral. They don't reward intelligence alone, they reward alignment between who you are and how you act. The trader who knows his nature adapts strategies that fit. The one who doesn't know himself will always sabotage his own system. From a Stoic perspective, awareness is freedom. Marcus Aurelius wrote, you have power over your mind, not outside events. Realize this, and you will find strength. Awareness gives you that power. The greatest edge is not a strategy, not an indicator, not even market knowledge. The greatest edge is awareness of yourself. For in awareness, you see both your weapons and your weaknesses. Without it, your best traits will destroy you. With it, even your weaknesses can become strength. The market does not test your system first, it tests your awareness. And only those who see themselves clearly survive its storms.
Some traders keep hunting for the perfect system, the secret indicator or the magical guru. They believe success is out there, somewhere, but the truth is quieter, almost hidden. The greatest system is not outside you, it is inside you. Your mind can either be your worst enemy or your most loyal ally. If you master it, you carry an edge that no market crash, no manipulation, and no news headline can ever take away. Thousands of traders use the same moving averages, the same Fibonacci retracements, the same price action patterns. Yet their results differ wildly. Why? Because success is not about knowledge alone. It is about execution under stress. The chart may show a perfect setup, but if your hands are trembling, your finger hesitates on the mouse, or your greed makes you ignore your stop loss, you will fail. Strategy without psychology is like a sharp sword in the hands of a trembling warrior. Psychology with strategy is like a calm archer, hitting the target again and again. Fear of loss makes you cut winners too early, stops you from taking valid trades. Greed for more makes you hold losers, hoping they turn around, pushes you into overtrading. Impatience makes you chase setups that aren't there, makes you abandon systems too soon. Ego makes you revenge trade to prove yourself right, makes you ignore lessons from failure. These are not random emotions. They are parts of your psychology amplified under stress. 1. Self-awareness first. You cannot control what you cannot see. Journaling trades, reflecting on emotions, and observing your triggers creates clarity. 2. System alignment. Don't force yourself into strategies that clash with your temperament. If you hate waiting, scalping may suit you better. If you hate noise, swing trading may calm you. 3. Rituals before trading. Just as athletes warm up, traders must center themselves. Breathing, affirmations, or a quick meditation aligns your state. before entering markets. 4. Risk rules as psychological protection. Risk management is not just math. It is emotional armor. Knowing you cannot lose more than 1 to 2% in a trade calms the storm inside. 5. Detachment from outcome. Shift focus from did this trade win to did I follow my process? This breaks the cycle of emotional highs and lows. Fearful trader? Use that fear to become an excellent risk manager. Greedy trader? Channel greed into ambition. Drive to master systems, not chase trades. Impatient trader? Use impatience as energy, but direct it into learning and journaling. Ego-driven trader? Turn ego into accountability. Compete not with others, but with your past self. Mastery is not about erasing traits. It is about redirecting them. Trader A knows 50 indicators, 20 patterns, and follows 10 gurus. Yet he keeps blowing accounts. Why? Because in every loss, his emotions hijack his plan. Trader B knows only 2 strategies, but has mastered his psychology. He knows when he feels fear, when greed is whispering, and how to step back. He doesn't fight the market. He manages himself. Slowly, steadily, his account grows. The difference is not knowledge. The difference is inner mastery. Stoicism, Epictetus said, it's not what happens to you, but how you react to it that matters. In trading, news, losses, and volatility are inevitable. Your reaction decides your fate. Jungian psychology. The market exposes your shadow, the part of yourself you deny. If you ignore it, it sabotages you. If you integrate it, you grow. Zen perspective. Trading becomes meditation. Each trade is a lesson in detachment, presence, and clarity. The edge is not the chart, not the candle, not the tool. The edge is the mind that uses them. When you master your psychology, you become unshakable. Fear becomes caution. Greed becomes drive. Impatience becomes energy. Ego becomes resilience. Every trader seeks certainty in markets, but the only certainty you can ever build is within yourself. Master your psychology and you master your trading destiny.